Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump confirms plans to impose 25% tariffs on all imports of steel and aluminium, broadening his trade salvos and threatening ties with some of America's top trading partners. Israel pulls troops and tanks out of a belt of land in the Gaza Strip after the fifth hostage and prisoner exchange on Saturday. Meanwhile, Arab nations reject Benjamin Netanyahu's proposal to resettle Palestinians from Gaza into Saudi Arabia. Plus, African leaders call for an immediate ceasefire in Eastern Democratic Republic of the Congo as the conflict with Rwanda-backed rebels risks igniting a regional war. Well, it has just gone 8 a.m. across the Emirates. Happy Monday, everybody. I'm Joanna Versace in Dubai. Well, another Monday, another tariff headline. This time, President Trump is talking about a 25% tariff on all steel and aluminium imports. That just came out over the course of the last few hours. But interestingly enough, look at the price action behind me. Futures seem to be shrugging it off. We got S&P futures up 0.3%, NASDAQ up almost 0.5%. And some people are saying that maybe we're beginning to get to a stage of tariff fatigue. Investors know that this is just initial posturing. Where we end up is unlikely to be where the initial proposal starts with. So this is a reaction from futures, which is interesting in case taken in the context of Friday's price action as well, which saw actually Wall Street end the day in declines. S&P down almost 1%, NASDAQ down more than 1% on Friday in response to that NFP print that came through. Headline coming in slightly below expectations. And what we did see in the reaction to the NFP data, not the headline, but the fact that the unemployment rate dropped a little bit, was 10-year yields rose about 3 basis points, sitting just shy of 4.5% now, about 1 basis point lower overnight as well. So still 4.5% seems to be like quite an anchor for the 10-year yield. U.S. dollar this morning also up 0.2%. Every time their trade salvos talk about tariff, you do tend to see a bid for the USD. And we're going to talk shortly about the impact that some of those comments are having on commodities, currencies, and the currencies linked to steel and aluminium. But speaking of the metals, let's switch over. This is the board now for some of those key metals that are being targeted. Look, I'm not going to pretend to be an expert on aluminium and steel, but what I can tell you is the reaction is minimal so far in these markets. Aluminium not doing a whole lot, and iron ore, key components into steel, obviously, as well, not reacting a whole lot as well, up 0.2%. Copper not being targeted, but clearly a key metal when it comes to the transition, trading flat today. And then gold continues to benefit from being a safe haven currency close to record highs. So $2,876 is where we are right now, up 0.5%. And all of the noise around geopolitics, tariffs, the trade impact, all of that has been benefiting the bullion. So that's where we are right now. But let's further the conversation and take a look at how markets in Asia are faring. David Ingles is in Hong Kong digesting all of the news for us, David. Just another Monday morning and another Monday morning tariff headline. How are these markets reacting?
Yeah, I need a Friday already at this point in time. Tariff fatigue. I mean, we woke up this morning, it was rather quiet on the news, and then, we started to get, again, this is a nuanced market reaction we're seeing here in the Asia-Pacific. Because to your point, right, on a broader benchmark basis, we're not really seeing markets overreact, I guess, to some of the headlines which come through. Although when you look at places where you would expect some of the more tangible effects to be felt, if indeed that happens, of course, we are seeing that as well. So a stronger dollar, and a stronger dollar in particular against a lot of the cyclical commodity exposed currencies like the Aussie dollar, like a lot of these currencies, for example, across Southeast Asia, like the ringgit and also the Indonesian rupiah. Now, when you look at the equity market complex, it's also very targeted and nuanced there. So mining stocks and a lot of the resource-related markets like Australia is a very good example of that. This is just a partial list, really, of what we're seeing across the region. You have steel names in South Korea. Some of the mining stocks across India and South Korea are also feeling the pinch today. Now, all that being said, I'll leave you with somewhat of a positive note here. Remember on Friday we talked about the bull market in China. So we entered the bull market eventually on the Hang Seng Tech Index. We are extending that bull run today. And Alibaba, for example, is now at a 4-month high. HS Tech Index has come within 3% of the peak, well, last year's peak to be more exact here. But as you can see, that's playing out and really divorcing itself from the broader weakness or trading sideways across most of these markets. So it's a really nuanced market story this Monday. Jomano.
Yeah, David, and also thank you for reminding us about the outperformance of those Chinese tech stocks versus U.S. tech. Bit of a surprising bit of price action the last couple of weeks there, so definitely something that is noteworthy. Let's go back to the main story today. President Trump says he's going to slam 25% tariffs on steel and aluminium, or aluminum if you're in the U.S. That announcement coming while he was speaking to reporters aboard the Air Force One.
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum, too.
10%?
No, 25%.
25 for aluminum?
25 for both.
For more, let's bring in Bloomberg's Asia senior editor, Bill Ferries. Well, he did tell us tariffs is the most beautiful word in the dictionary. And this time, tariffs are going to be applied on steel and aluminium, Bill. But one thing that I thought was quite interesting that caught my attention this morning is it's the same suspects as last week. The U.S. imports a good amount of steel and aluminium from Canada and from Mexico. So what do we know about these latest proposed tariffs?
Yeah, that's right. If these tariffs were put into effect, as you mentioned, Canada and Mexico would be at the top of the list. And of course, President Trump has already threatened 25% tariffs on all imports from those countries. Some of the other countries that could potentially be impacted would include places like South Korea, United Arab Emirates, even Taiwan as well. But the big question that's been left hanging out there is he said he'll make this announcement on Monday. He seems to have kind of made it right there, but he didn't say when those tariffs would come into effect. Of course, with the Canada and Mexico tariffs, there was an agreement to delay for 30 days. That pushed the deadline off until I think it was March 4th. So we don't know if this is in addition to that, if it's something that would go alongside, or what the timing of any of it would be at this point.
Yeah. Bill, how is this related to the U.S. Steel, Nippon Steel story, if at all? Because we know that even President Biden was against the proposal and the takeover attempt by Nippon Steel of U.S. Steel. Could the comments about tariffs be related to that particular takeover?
It could be. This is that $14 billion deal that's been fraught ever since it was announced at the end of December 2023. We do know that over the weekend, the Japanese Prime Minister and President Trump met, and they came up with a proposal that we don't have many details on. They just said that Nippon Steel would make a large investment in U.S. Steel, an investment that presumably would fall short of 51% ownership. We don't really know, again, the details of that or whether that would be acceptable to either of the companies involved or the unions that have opposed the deal from the start. It's clear President Trump wants to see major U.S. steel companies remain in American hands. He wants to see some of the trade barriers to importing steel and aluminum going up. But what this means for that $14 billion deal, we're going to have to wait for more details from the White House. We've reached out to them. We just haven't heard back so far.
Yeah, I mean, you just got to wonder about the strategic imperative of all of this, because the whole world has changed. And even if you want to boost the manufacturing sector, advanced manufacturing, if you're looking for a strategic advantage, you're probably better off focusing on the tech sector and semiconductors. But that's a different point entirely. Bill, I do want to just bring it back to what has been going on with the Doge team. Lots of questions about its access, Elon Musk's access to Treasury data. It looks as though the access was paused this weekend. So what is the latest in terms of what the team says they are looking at versus what they actually have access to look at?
Well, we know from that interview last week with Treasury Secretary Scott Bessent that he said then that the Doge team was having read-only access. That's been affirmed by a judge over the weekend as well, really restricting what Doge can do and what they can see and the number of people who have access even to that read-only data. Nevertheless, the Doge team says they are sending personnel out to a facility in West Virginia this week. It's a facility where the Treasury Department keeps a lot of its key accounting and payment systems. They're presumably going to be looking through that. It includes the system that involves payments for all the federal agencies. So the DOJ team is continuing its work, although it does seem with more legal restrictions on it for the time being.
Yeah, Bloomberg's Bill Ferries, thank you so much for the latest on all of the Trump announcements in the last 24 hours. All right, turning to regional politics now. Israel has pulled troops and tanks out of Gaza's Netzarim corridor as the initial truce period passes its halfway point. Hamas released 3 Israeli civilian men on Saturday, and Israel freed another 183 Palestinian prisoners. This comes as mid-level Israeli envoys prepare for a new round of mediated truce negotiations in Qatar. Joining us now is Paul Wallace, who leads our MENA economy and government coverage. Lots of developments over the weekend in our part of the world, but let me just start with the hostage release, namely because there was a lot of backlash in Israel at the state of the hostages, looking very gaunt, looking very emaciated. And I wonder whether that's going to have any knock-on effects vis-a-vis progress or potential progress out of phase 1 into phase 2.
Hi, Jumana. Yes, I think this was the first time we've seen hostages that were visibly in a bad state physically and very thin, as in the case on Saturday, being handed over to the Red Cross and taken back into Israel. That did shock Israel. Donald Trump, too. Donald Trump likened it to scenes from the Holocaust, to when people were freed from extermination camps and things. So it definitely is something that shocked Israeli society. However, there is a sense within Israel that these scenes of hostages looking emaciated make the Israeli public even more determined to see the rest of the hostages released, to see us go to the second phase of the ceasefire. And in fact, a recent poll done over the weekend showed that the vast majority of Israelis, 70%, want the country to go to phase 2, and that even included a majority of supporters of the ruling coalition.
And of course, President Trump continues to look ahead to the future of Gaza. We spoke about this on Friday. He doubled down in his comments vis-a-vis the U.S. taking ownership of Gaza, but then also over the weekend floated the possibility of Saudi Arabia hosting some Palestinian refugees. Saudis were quick to respond. How should we read all of this?
They were very quick to respond to that, and it was unclear. Some people in Israel suggested that Netanyahu was just making an off-the-cuff joke, but regardless, it didn't go down well in Saudi Arabia or the rest of the Arab world at all. In the Arab world and among Palestinian officials, if you're talking about the Palestinian Authority, the line is very much that the displacement of Palestinians from Gaza is not going to happen. If anything, their talk about a two-state solution or Palestinian statehood is strengthening, and there is a sense that what Trump has brought up in the last week about the U.S. taking over the Gaza Strip and so on has actually strengthened the push in the Arab world to eventually get to Palestinian statehood.
Yeah, and we do know that Egypt are going to be holding an extraordinary Arab summit at the end of February. So that tells you that it has, in a way, sharpened the focus of many of these Arab countries.
Very much so. And a lot of Arab officials are actually starting to go to Washington now. We've got the Jordanian King Abdullah. He will go on Tuesday to meet Trump. The Jordanian and Egyptian foreign ministers have already gone there. I think they're really trying to form a united front and to really get the message across to Trump and the White House that this idea of theirs is not going to work. And in fact, there has been quite a bit of toning down from White House officials about Trump's proposal, and Trump himself has said he's in no rush to do this, which is possibly a signal that he gets the message from Arab states.
Yeah. Paul, thank you so much for the overview. Paul Wallace, leading Bloomberg's MENA economy and government coverage. Thank you. Well, Lebanon has appointed BlackRock money manager Amir Bsat as economy minister, making him a key figure in the new government. Bsat will work with Finance Minister Yassin Jabir in preparing a recovery plan to unlock a stalled $3 billion IMF package and oversee financial restructuring. Lebanon's defaulted bonds have surged since Israel and Hezbollah agreed a ceasefire in November. And still ahead, find out why our next guest compares the U.S. economy to a motorcycle in Manhattan. Lemand of Neovision Wealth Management joins us in a moment. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. President Trump's pledge to impose tariffs on all imports of steel and aluminium has pushed commodity currencies and Asian stocks lower. Our next guest says if 2024 was the year of uncertainty, 2025 is shaping up to be the year of sheer market whiplash. Joining us now is the CEO and co-founder of Neovision Wealth Management, Lemand. Well, in our tease out to you before the break, we were saying that you've compared the U.S. economy to a motorcycle in Manhattan. What does that mean? Not that I've ever driven a motorcycle in Manhattan, but please explain to us.
Listen, the U.S. economy and the U.S. as a country is just like a semi-truck. The way you adjust it, small adjustments, predictable, where you know where it's going. At the moment, the way it's being driven is literally like a motorcycle zigzagging in the streets of Manhattan. This is what I meant by it.
Yeah.
It's so destabilizing for all market players.
Yeah, so how do you navigate the fact that there is so much uncertainty stemming from quite a volatile U.S. president and not stemming from the data itself? As a trader who's got access to all of this information, what do you place more weight on? Is it what the administration is saying, or the data that's coming through for the economy?
Well, Jemina, let me tell you, in 2017, I was sitting in that seat there talking about exactly the same thing. We used to tell our analysts, open Twitter before you open your Bloomberg terminals. Unfortunately, yes, we have to look at what he's saying because this is what's impacting markets today, the economy and the world. Like we've seen tariffs on steel and aluminium just mentioned, and China just announced 15%.
Yeah. So let me just flag something else that has happened in the markets that is also quite interesting and nothing to do with President Trump, and that was the arrival of DeepSeek. My colleagues in Asia have been tracking the big Chinese tech outperformance versus U.S. tech versus NVIDIA specifically. Perhaps that actually is a bigger event for markets than all of the noise around tariffs every Monday.
Oh, 100%. Let me tell you two things. One, no one can compete with China on price, development, and the way it does things. No one. We've seen it in EVs, we've seen it in mobile phones, and it was inevitable to see it on AI as well. The arrival of DeepSeek, in my opinion, is not very innocent. The timing of it specifically. They were waiting to see what's happening, and you see the announcement. It's very timely, actually. We expect more to come because now trade war has started between the U.S. and China. And China knows very well that the U.S. stock market's Achilles heel is tech, it's semiconductors, and it's AI.
Yeah, so who wins the trade war? Is there a winner in a trade war, or is everyone a loser?
In a trade war, no one wins.
Okay.
No one. The biggest loser is the consumer.
Yeah.
And ultimately politicians. Their mandate ends, they move on, they continue to benefit from their benefits, and that's it.
Yeah, so you and I spoke a couple of months ago. You were underweight the U.S. tech sector.
Absolutely.
U.S. tech sector has actually continued to perform well.
Yeah.
Do you feel like you're missing out by not being involved there?
No, because we've done very well, one on gold, and we've been long gold on this stage as well. In 2023, I think, 25% of our portfolio is gold. We have Chinese stocks. We've done very well on multiple Chinese stocks. You've seen Alibaba. That was fantastic. Indian stocks. So we've done very well. And so we haven't missed any performance, minus the volatility and risk budget.
What do you think derails the thesis for Chinese tech stocks here?
Is the trade war going worse and worse, whereby becomes destructive? Again, everyone loses in this case. And yes, the stocks can be a victim here. That's why we're hedging.
Yeah. Let me ask you about gold. I know it's one of your biggest positions. A big percent of your portfolio, 25% of your portfolio has been in gold. It's done extremely well.
Yes.
We're getting close to $3,000 here. If you were an investor who was not already involved in gold, would you still buy at $3,000?
Absolutely. All of the components for gold to be going up are still there. Production of gold is at a shortage. Central banks are still buying. Geopolitics is still an issue. We have a trade war. All of these, it's an intersection of many factors that are pushing gold up, and they will continue to push it up.
Positioning is quite long, though. So how do you think about that and the potential for I mean, we've seen it several times over the course of the summer. Whenever positioning is extreme, you tend to get whiplash effects and pullbacks in the market. How do you think about the length of positioning in gold right now?
If you look at banks today they have the largest short position on gold that we've seen until now. So we will see volatility. Any dip is an opportunity to buy. So maybe not buy at current levels, but let's wait for the next dip and buy. From our side, we're continuously buying as per the proportions of our model portfolio.
What about the strength of the USD on all of your thesis that just outlined?
The USD will remain strong for the foreseeable future, minus the yen, because we do think that the BOJ will raise rates and the yen will be the exception until President Trump decides that it's no longer beneficial for the US to have a strong dollar. But as long as he does, it will remain strong.
Yeah. Ryan, always good to chat to you. Thank you so much for coming on the show and spelling out your views. Ryan Lemand, CEO and co-founder of Neovision Wealth Management. Now, African leaders call for an immediate ceasefire in the eastern part of the DRC. All the details coming up on that story. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. The boss of the Suez Canal Authority says he expects traffic through the waterway to gradually return to normal by late March and fully recover by mid-year, provided the Gaza ceasefire holds up. Yemen's Houthis said they'd stop targeting US and UK ships in response to the pause in fighting. Currently, no more than 32 ships a day pass through the canal, compared with 75 before the Gaza war began. And France is set to announce 109 billion euros in investment in artificial intelligence projects by companies, funds, and other sources over the coming years. Speaking on the eve of a two-day AI summit, President Emmanuel Macron also referenced an investment by a fund from the UAE of between 30 and 50 billion euros in a data center campus. And Philadelphia Eagles fans are celebrating after their team won America's Super Bowl, beating the Kansas City Chiefs 40-22. The Chiefs were playing in their fifth Super Bowl in 6 years, but in the end, they were denied an unprecedented third straight win. President Trump was at the final, becoming the first sitting president to attend a Super Bowl in the event's 59-year history. And a quick look at equity futures as we head into the European Open, leaning towards the green. S&P futures and Nasdaq up about 0.3 and 0.5% despite the latest tariff news, with the Trump administration floating the possibility of 25% tariffs on steel and aluminium. And in a while, we're going to talk a little bit more about what's been happening in the world of golf. Stay tuned for our exclusive interview with LIV Golf CEO. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. President Trump confirms plans to impose 25% tariffs on all imports of steel and aluminium, broadening his trade salvos and threatening ties with some of America's top trading partners. Israel pulls troops and tanks out of a belt of land in the Gaza Strip after the fifth hostage and prisoner exchange on Saturday. Meanwhile, Arab nations reject Benjamin Netanyahu's proposal to resettle Palestinians from Gaza in Saudi Arabia. Plus, African leaders call for an immediate ceasefire in Eastern Democratic Republic of the Congo as the conflict with Rwanda-backed rebels risks igniting a regional war. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. The latest news this morning being that President Trump is now floating the possibility of tariffs on steel and aluminium imports up to 25%, he's saying, across all imports. But again, as you were speaking about earlier, it specifically targets Canada and Mexico more than any other country. So something to think about there, because it mirrors the price action that we had, or the announcement we had, rather, not price action, 1 week ago when he also announced broad tariffs on Canadian and Mexican imports. But today, the market reaction is decidedly different from what we had 1 week ago. Futures brushing off some of those concerns, up 0.3% for the S&P, almost 0.5% for NASDAQ, despite the pullback that we had on Friday on NFP day. So just speaking about those numbers, the headline print came in slightly lower than expectations, but there was a bit of an upward surprise with the unemployment print coming in lower than expectations, average hourly earnings rising a little bit. So U.S. Treasuries did actually sell off into the news about 3 basis points higher. Today, we're about 1 basis point lower, sitting at 4.48%, so still around that 4.5% mark. Also bear in mind that Powell gives a testimony, 2-day testimony this week. So we may get some headlines there that could influence the trajectory of interest rates from here. USD also rallying this morning up to 0.2% on back of those tariff proposals. Anytime there's a flaring up of geopolitical concerns or tariff talk, we tend to see a bid for the USD. As for how the metal complex is reacting, well, we're not seeing a whole lot this morning in terms of those key components. In fact, aluminium is slightly lower on the session, 4 basis points lower. Copper not targeted, but still key transition metal, not doing a whole lot either. Iron ore, key component going into steel, is up about 15 basis points. But I should say, and also remind people, that the biggest importer of steel in the world is China. It's not the U.S. So the fortunes of iron ore tend to be quite closely correlated with the fortunes of the Chinese economy. So that's something to bear in mind. And then gold, we were just speaking about it with our prior guest, continues to go from strength to strength, close to all-time record highs, up 0.5% this morning for the gold bullion. But let's also check in on how markets in Asia are faring. David Inglis is in Hong Kong, taking a look at all the price action as these equity markets piece together yet new salvos coming from the Trump administration.
Yeah, and we're really seeing them more targeted in terms of the reaction today to the point you're making. It's not the broad sort of sell-off that we're seeing. In fact, this board I have for you is Aussie dollar. You have the Malaysian ringgit, which is, of course, somewhat seen as a sort of commodity-related currency. You have the broader equity benchmark, and then you have the mining stocks, varying degrees of bad, if you will. So I guess in some ways you are seeing some reaction, but not completely everything getting thrown out the window, the baby and the bathwater. A little bit more on this. So things like steel makers, iron ore producers, mining stocks, just about across the region, as you can see, are feeling the initial impact of this. Obviously, we don't know how things are going to settle, but as far as this group is concerned, you are seeing some weakness coming through across this equity complex. I like heavy metals, if you like that pun. Very quickly, let's flip the page, please, and have a look at sort of the silver lining to today's sort of broad weakness. Is really, again, the story, we keep coming back to this. We are on the lunch break here in Hong Kong, but what a morning we had, really, for Chinese tech stuff, extending the rally that we had on Friday, diverging really from the weakness we're seeing in the currency, which is really down more to the macro news that you were just talking about, Jomana. I'll end on this, though. How does this look, broadly speaking? We're about 3% now from the high we hit back in October, and our folks at Bloomberg Intelligence have put out a note that maybe this deep-sea conversation is providing enough shelter there amidst the tariff news here. Back to you.
David, thank you so much for the overview. Now, President Trump has compared the freed Israeli hostages to Holocaust survivors. Speaking on board Air Force One on his way to the Super Bowl, the U.S. president said the hostages looked like they hadn't had a meal in a month. Hamas released 3 more hostages at the weekend, while Israel has pulled troops out of a belt of land in Gaza as part of the ceasefire deal. Joining us for more is Niamh McBurney, Associate Director at Control Risk. So I was speaking about this with our colleague Paul Wallace earlier. I think many around the world were surprised to see the state of the hostages that were released over the weekend. And I just wonder whether you think it's going to galvanize the discussions vis-a-vis transitioning from phase 1 to phase 2, because now there's actually a lot of pressure on the government to secure the release of the rest of the hostages, or is it going to embolden the right and the far right of the Israeli cabinet and that they don't want to see a continuation of the ceasefire and would actually like to see a flaring up of conflict again versus Hamas?
We think there's possibility of both of those occurring. So we've already seen over the weekend quite a significant response from Israeli civil society and the public, the shock, as you say, at the state of the hostages. And there is a great deal of pressure on the government. But unfortunately, President Trump's comments indicate that, the government would have support, at least from him, to delay the rollout of phase 2, which we're expecting in a couple of weeks. There's already a negotiating team in Gaza from Israel, but we know that Netanyahu has expressed some reservations about proceeding to phase 2, and he's also kind of looking to continue to hold control of the overall situation, in which kind of slightly manipulating the timing would allow him to do. So there is some concern that he could at least delay the timeline in the very least.
How seriously did you take Trump's comments vis-à-vis taking ownership of Gaza last week?
President Trump has a history of making statements that are a significant opening gambit, shall we say, as part of negotiations process. But he also has a history of making comments that are part of long-standing feelings or emotions or sentiment that he has. You could frame this as being part of, what Jared Kushner originated with the deal of the century back in Trump's first term. But you could also see it as the president trying to force the hand of the Arab states in looking to bring something new to the table other than the Arab Peace Initiative, which is what the Arab states have presented and Saudi Arabia defended over the weekend. Yeah. So it could be a bit of both.
How likely is it that the Arab states do actually present a united front? And we know that they're planning a summit at the end of February to discuss the situation in the Palestinian territories. But how realistic is it, in effect, for us to get a united front from all these Arab nations that have different prerogatives?
So there is broadly a united front because at the core of it, there's no other offer on the table. So they are united behind this now because it's the best possible of the worst propositions, if you will. But maybe we're in a world now where different considerations need to be made and new solutions need to be put on the table. There's a number of countries in the region that would be in a position to do that. The members of the Abraham Accords. The question is if there was a new offer on the table, could they then get cohesion around that? Saudi Arabia has been very, very clear over the weekend that it is sticking to the Arab Peace Initiative, and it's really spearheading and leading at the front of this diplomatic effort. So if the ground starts to shift, if there's another potential solution, that's actually where things could start to fall apart from a diplomatic point of view.
Yeah, you just wonder whether the notion of a two-state solution is still actually viable for many of the players. And here specifically, the comments, the reason why Trump's comments last week were so shocking to everyone is because he completely undermined the notion of a two-state solution. And obviously his aides had to come back in and dial it back down again.
Yes.
Many within the Israeli cabinet on the far right would not like to see a two-state solution. So I just wonder whether everything that has happened in the last couple of months has taken us further away from a potential two-state solution to the situation.
It hasn't necessarily taken us further away. It's reaffirmed the position that we were in before the 7th of October, which is that it's a very, very difficult future to see, and both sides are going to have to compromise on particular issues. As you say, President Trump, making his own position clear, but also the actions of the Israeli government in Jenin over the weekend in the West Bank and in the last couple of days indicate that, again, it's an overall negative direction of travel. Yeah. This isn't to say it's impossible, but there needs to be changes from multiple players here before we kind of get a reinvigoration of it as it was envisaged originally.
Yes, slightly different tact, but still important in the region. Lebanon government has finally been formed, being agreed to, under a bit of pressure, I would say, from America, with Morgan Octavus arriving to the region, to Lebanon, and making those very pronounced comments regarding Hezbollah and Hezbollah's hegemony in Lebanon. What do you see as the path forward for this Lebanese government? Are they likely to be successful at breaking away from the shackles of Iran and Iranian influence?
Well, I mean, there's an argument to be made that this government kind of isn't inhibited by those because of the members that it has. Nawaf Salem is known as a very independent, individual. He's now a politician. He's no longer head of the ICJ. I would suggest that it's not necessarily the government here about it, to use your phrase, the breaking away of the shackles, but it's systemic within Lebanon. Is the government going to get the aid it needs from the GCC and the US and other countries, and including the EU, a major donor to Lebanon, to be able to, fund the reconstruction that's absolutely necessary in southern Lebanon, to recreate the social structures, the localized political structures, humanitarian structures, and others that exist in southern Lebanon that Hezbollah did provide for so long. It filled a vacuum back in the 1980s. So, someone else needs to come and fill in that vacuum again. Yes, otherwise it will be difficult to break away, its role and weaken its role in the country.
Yeah, still a lot of question marks, but at least a little bit of progress to the path forward. Niamh McBurney, Control Risk Associate Director, thank you very much. Coming up, LIV Golf is closing in on more exemptions for its players to participate in premier competitions. Our interview with the new CEO, Scott O'Neill, is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. LIV Golf is closing in on more places for its star golfers at the world's premier competitions. Securing exemptions could pave the way for unification between the breakaway Saudi-backed league and the US and European tours. I spoke with the new CEO, Scott O'Neill, as he attended LIV's 2025 season opener in Riyadh.
We have been for, of, and about growing the game of golf. And there are so many new and exciting leaders. If you look at Derek Sprague at PGA of America and Mark Darbin at the RNA, and I'm new at LIV, and I know the PGA is looking for a new executive as well to work alongside Jay. And I think that provides an opportunity for us all to take a step back, appreciate where we are in this moment of time, and move forward. The fact that the leader of the free world, the President of the United States, thinks that golf is this important that he can engage makes us really happy and validates how important this game is. And I still believe it's one of life's great teachers and just as important as we could possibly find today in bringing this game together. So any news that brings us closer to that, I think is really welcome news for all the golf fans around the world.
Have you spoken to the president directly yourself?
I have not, no. In a few weeks, we'll be in Miami playing at Doral, which is a Trump course. And I imagine he'll make an appearance there. But, in these first 30 days, I've had the time of my life getting to know these incredible stars like Brooks Koepka and Dustin Johnson and Bryson DeChambeau. We have the best players from around the world. That's been an experience. Getting ready for this incredible event season, kicking off in Riyadh, and getting our feet under us and planning for the future.
Now, I know you're not in position to give us the contours of the deal, but is it your expectation that if a deal does come to fruition, that it would allow for more coexistence between LIV players and the PGA Tour? Is it your expectation that ultimately LIV players could participate in the PGA Tour without being penalized?
Our focus right now is on making sure we take the best players in the world to the best locations in the world. It's a deal and a construct that we've all been working on for some time, and we're all focused on the same goals and objectives, and that is to grow this game, put as many of the greatest players on the biggest stages of the world. And while I'd love to walk chapter and verse into the deal, I will tell you that anything that's good for this game is good for LIV, and we're thrilled that there's progress being made.
Yeah. One recent development earlier this week, the U.S. Open became the first major to actually create an exemption for LIV golf players. Do you expect other majors to follow suit as well?
Very appreciative of Mike Wan and his leadership at the USGA. We heard today from Mark Darbin, who runs the RNA and the Open Championship, and they will be following suit. And at least the early conversations with Derek Sprague at the PGA of America are very positive as well. So it seems as if the headwinds are becoming tailwinds. There seems to be this incredible arc of momentum, and whether that's our deal with Fox in the US or our deal with ITV in the UK, or all the incredible partners we've had. Madden is our title partner here, and Bahri just came on board as well, and Roshan. So we're starting to get momentum in terms of the entire business. So it's quite expected in terms of where we're heading.
Yeah, you mentioned some of those broadcasting arrangements, and obviously the PIF have put in billions into LIV. Revenues, a big question mark from here onwards. To what extent do you think those types of broadcasting deals, those arrangements, are all going to be additive to your future revenue flow?
I'm here for one reason, and that's because spending time with His Excellency Yasser Al-Rumayyan is a man of vision and compassion, passion for the game of golf. He's got an incredible love and understanding of what's to come. And the investment to put this many incredible star players together will result in an incredible business. And so the foundational years have been built, and now we're ready to grow this business. So it's a really special moment in time right now.
That was the LIV Golf CEO Scott O'Neill speaking to me from Riyadh on Friday. Now, coming up, African leaders call for an immediate ceasefire in the eastern part of the DRC. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. African leaders have called for an immediate ceasefire in the eastern part of Democratic Republic of Congo. They made the call following a summit in Tanzania.
The time for action is now. The lives of millions depends on our ability to navigate this complex and challenging situation with wisdom, clarity of mind, empathy for the millions whose lives and livelihoods have been plunged into uncertainty.
At least 3,000 people have been killed and hundreds of thousands displaced since fighting broke out between Rwanda-backed M23 rebels and Congo's army. Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. Talk us through the highlights from the summit this weekend and whether actually any headway has been made.
Hi, Jumana. So from the summit, both EAC and SADC leaders agreed that diplomatic and political routes are the ideal solutions to the escalating conflict in the eastern part of DRC. There were other agreements, including unconditional ceasefire and also a cessation of hostilities in the coming weeks. The military chiefs were also directed to provide technical guidance on how humanitarian assistance is going to resume and also opening of major supply chain routes. We are seeing Goma, a city of nearly 3 million people, running low on water, on food, medical supplies, and they have limited access to electricity. In terms of headway, very little is being made because after this summit where President Paul Kagame attended in person and his DRC counterpart Tshisekedi opted to join the summit rather virtually, we saw President Kagame take on X and say that DRC cannot tell Rwanda to keep quiet when they're mounting a security problem that is affecting the country. So while conversations have begun between the two parties, they're far from seeing eye to eye and reaching an agreement.
And the fighting still continues. So just walk us through the current situation on the ground right now for the people of Goma.
The situation is dire. The United Nations High Commissioner for Human Rights told an emergency sitting in Geneva that thousands broke free from a prison during the fighting and 165 women were sexually abused, many of whom died in a fire under very unclear circumstances. And he called on everyone with influence to do something to stop this conflict from escalating, because very soon the eastern part of the Democratic Republic of Congo is going to become inhabitable for the millions that have gone there to seek refuge. And he also says that there's a very high risk of this conflict spilling over the border. The international community is yet to place sanctions, but the U.S. has warned that it will slap sanctions on officials from both sides if this tension is not de-escalated soon.
Bloomberg's Ondiro Ganga in Kigali, thank you so much for bringing us the latest. Now for a look at some of the other stories we're following today. Former Credit Suisse chief executive Tidjane Thiam has given up his French citizenship as he prepares to run in Ivory Coast's presidential elections. One of the conditions to qualify as a presidential candidate is exclusive Ivorian citizenship. The former banker still needs to win the Democratic Party's primaries to stand in the October election. President Trump has frozen all U.S. aid to South Africa, citing false claims of rights violations against the Afrikaans population and South Africa's genocide case against Israel at the ICJ. South Africa says it is seeking diplomatic solutions to any misunderstandings. A group that says it represents 2 million Afrikaans speakers has voiced opposition to Trump's decision to withdraw aid. And the Kremlin has declined to confirm or deny that Russian President Vladimir Putin has spoken with President Trump. This after the New York Post cited the U.S. leader aboard Air Force One, saying they had discussed the war in Ukraine on a phone call. And Bloomberg has been told that activist investor LIV Management has built a significant stake in British oil major BP. Sources say Elliott wants to boost value by pushing the energy giant to consider transformative measures. Its shares have lagged peers, including Shell and ExxonMobil, over the past 5 years after a failed bet that oil consumption had peaked. And a look at the equity futures markets as we head into the session, into the opening of the European session. It is green, a full board of green. S&P futures up 0.3%, NASDAQ up about 0.4%. Eurostoxx futures also up 0.2. The big news this morning being the Trump administration's announcement that they would like to impose 25% tariffs on steel and aluminium imports. This time around, however, markets seem to be shrugging it off at a macro level. Micro level, you are seeing certain currencies and specific sectors getting hit. But that is the board as we head into the open. But coming up in the next hour, we'll be speaking to Connor Fitzgerald from Wellington Management and Jason Stearns from Simon Fraser University. Stay with us as Jennifer Zabazaja joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump confirms plans to impose 25% tariffs on all imports of steel and aluminium, broadening his trade salvos and threatening ties with some of America's top trading partners. Israel pulls troops and tanks out of a belt of land in the Gaza Strip after the fifth hostage and prisoner exchange on Saturday. Meanwhile, Arab nations reject Benjamin Netanyahu's proposal to resettle Palestinians from Gaza into Saudi Arabia. Plus, African leaders call for an immediate ceasefire in Eastern Democratic Republic of the Congo as the conflict with Rwanda-backed rebels risks igniting a regional war. Good morning, everybody. It's just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai. Happy Monday, everybody.
Happy Monday to you, Jumana. I'm Jennifer Zabasaja in Johannesburg, where it's just gone at past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, as we've seen over the past few weeks, we're starting a new week off talking about tariffs again.
Yeah, the one thing is very different this time around, Jen. A week ago, market was in bloodbath mode. Everything was trading super in the red on concerns about these tariffs. This time around, Trump is talking about 25% tariffs on steel and aluminium. And what you're seeing is equity futures are actually trading in the green. So I don't know if it's a case of buy the rumor, sell the fact, or some tariff fatigue coming into these markets, or simply because he's specifically targeting commodities. But the reaction today is much more subdued than we got 1 week ago when he was talking about those broad-based tariffs from Canada and Mexico. Though, interestingly enough, we were talking about this in the first hour of the show, but most of the biggest exporters of iron ore and aluminium to the U.S. are Canada and Mexico. So it's the same countries again coming up. Anyway, S&P futures up at 0.3%, NASDAQ up 0.4%. We saw a bit of a pullback on Friday. NFP print, not super exciting, I would say, slightly small miss versus expectations, but we did get a small improvement on the unemployment rate, moving 0.1% lower. So on the back of that, we saw 10-year yields back up a couple of basis points. Today, we are 1 basis point lower, but still very close to that 4.5% mark. USD this morning, 0.2% firmer. This on back of, again, once again, geopolitical uncertainty, tariffs, all of that has been good for the USD. But let's take a look at the metal complex, though, to analyze in further detail the reaction of these tariff announcements on specific industrial metals. And here you can see not a whole lot is going on. Aluminium trading sideways, iron ore as well up about 15 basis points. So really not a noticeable market reaction this morning. Copper not doing a whole lot either. But then gold, you continue to see a lot of money pouring into it, sitting at and close to all-time record highs here, just shy of $2,880. So 0.6% firmer today. But let's talk more about these potential tariffs, because President Trump says he is going to slam 25% tariffs on steel and aluminium. That announcement coming while he was speaking to reporters on board the Air Force One.
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum too.
10%?
No, 25%.
25 for aluminum as well?
25 for both.
For more, let's bring in News Desk editor Jill Desis. Jill, so 25% tariffs this time on steel and aluminium. Do we have any more detail about when they could likely go into effect and which countries specifically are being targeted?
Well, Giovanna, we don't at the moment. So obviously we heard those comments from Donald Trump on Air Force One. It sounds like we may be getting some more details during U.S. hours Monday, but so that may be where we actually get to see how exactly this would take place. But ultimately, I mean, there's a lot of unanswered questions here. As you mentioned, I think a bit earlier in this program, some of the chief countries that would be really hit by a tariff like this are ultimately Canada and Mexico. But the thing is that tariffs on Canada and Mexico have been delayed until at least March. So I think at this point, there's a lot of confusion, among traders, among suppliers, among other countries about whether these aluminum and steel tariffs would actually go into effect earlier, whether that would impact Canada and Mexico, or whether they would ultimately still, sort of be isolated and then covered under these blanket tariffs that Donald Trump has postponed for the moment as they kind of negotiate things here. But it does obviously, sort of indicate that Trump is pretty serious about his plans to ultimately imply some kind of blanket tariffs across a wide variety of different industries, a bunch of different countries. He's talked, about sort of universal reciprocal tariffs in the past. This does seem to be a piece of that puzzle, but without more details on, again, which nations are ultimately impacted here, and then, when exactly these take effect, it just kind of leaves a lot of uncertainty in the market.
Yeah, well, he wasn't only talking about tariffs on Air Force One. He was also talking about some of the work that the DOGE and the efficiency team have been conducting, and then saying at some point that Musk's efforts at the Treasury have found irregularities within the Treasury Department. What do we know about these irregularities that he's referring to?
Yeah, I think at that point, again, it's one of those things where I'm sure we'll hear from Elon Musk at some point this week, maybe from Donald Trump himself a little bit further. But, this is really just part of this larger plan that the DOGE department, this Department of Government Efficiency, is kind of looking into whether, departments here, we'll have to see what ultimately happens with that, some of these accusations against the Treasury Department. Elon Musk has actually sort of specifically called out some of the issues that he claims that DOGE is seeing within the Social Security Administration. So there's quite a few questions there in terms of what that ultimately leads DOGE to do. We obviously saw a lot of the fallout from, the DOGE Department's analysis of U.S. aid just last week. Another target that it seems is kind of, sort of come front and center for this department is the Department of Education. So at this point, again, it does seem like, Elon Musk, with Trump's blessing is making pretty quick work kind of moving through each of these different sectors, obviously, sort of leading to a lot of upheaval there. But in this particular instance, we'll kind of have to see where things go with some of these accusations against the Treasury Department.
Yeah, and they're big accusations. I think some people are really concerned about what data exactly this team have access to. So it is a big question. News Desk editor Jill Desis, thank you so much.
Now, for more on what we're hearing from the Trump administration, as well as the market reaction, let's bring in Garfield Reynolds, who leads the Markets Live Asia coverage. He's joining us now. So, Garfield, as we were talking about at the top of the show, this is a different tariff reaction than we saw last week. For the most part, equities not doing a whole lot. What do you attribute that to? Is there a bit of fatigue or just confusion right now in the markets?
Well, there's fatigue and confusion, and there's also, traders are trying to learn how to deal with what's coming out of the Trump administration. And if you look at what's come out this time, so 25% steel, 25% aluminum, exactly when, not clear. It also wasn't even that clear if he had been asked about semiconductors, would he have also said 25% tariffs on those? Because he had said before that they were part of his planned set of tariffs. Nobody seemingly asked him about semiconductors, so maybe those are coming too. We just don't know. There's no executive orders on the table or mooted. There's nothing like, the Canada and Mexico tariffs and the China ones, those were flagged sometime ahead. They were also tied to the emergency on the southern border that Trump declared, he tied those moves to concerns about fentanyl, concerns about immigrants. This is about trade balance concerns that could be leaked then to the plans for Howard Lutnick and his department to issue a report on measures that are needed in order to redress trade imbalances, which means that traders are very much looking at it and going, well, until we can be sure what's going on here, we don't want to rush to trade major tariff damage. After all, we priced in that a week ago with Canada and Mexico, and within a day, all of that went away, at least for the moment. So that's part of the fatigue factor going on. Traders don't want to price in now a lot of tariff pain when there's not much clarity, if any, is actually coming.
Absolutely. Garfield Reynolds, who leads the Markets Live Asia coverage, joining us there. Garfield, great to speak with you.
Well, joining us now is Wellington Management Fixed Income Portfolio Manager Connor Fitzgerald. Good to have you with us on the show. Let me just start off by asking you, how closely do fixed income investors trade around these tariff headlines? How much of a factor are they in driving the price action in where fixed income trades?
Definitely, and thanks for having me on today. I think fixed income investors are definitely focused on tariffs. I think the general view is that they're more inflationary short term, less clear on the long term. But overall, I would say it's a much worse trade-off potentially between inflation and growth. So a little more inflation, a little bit less growth, and that's obviously not a good thing long term. I would echo what was just said. There's just a high level of uncertainty around what actually gets enacted. There's a high level of uncertainty around how other countries will respond. So for now, I don't think people are trading too aggressively on it. But I do think in the past couple weeks, the market has pivoted a little bit more towards thinking that not all of Trump's policies are necessarily pro-growth, pro-inflation, maybe the way the market thought, say, 3 to 4 months ago.
Yeah, it's interesting that because if you take a look at where U.S. Treasuries were trading, say, even back in September of last year, we were closer to 3.5%. Now 4.5%, again, to account for the fact that perhaps the rate cutting cycle is going to be a lot more shallow, some fiscal concerns, raising up again, inflation, tariff, all of those things. At 4.5%, do you think you're adequately getting compensated for the risk of holding that duration?
I think you're getting more compensated than you were, to your point, in September, but probably still not at very attractive levels versus history. I think we would still favor 3, 4, 5-year maturity treasuries versus the 10-year, where you're not getting paid a ton of extra income or yield to really extend out the duration curve. But I do think, as inflation has come down, albeit still to levels slightly above the Fed's target, the yield curve has steepened out a little bit, which actually gives you positive carry by owning 5, 7, and 10-year treasuries, whereas a year ago the yield curve was inverted and you had a negative carry proposition from holding those. We do think that's important as it relates to how fixed income fits into a portfolio and can serve as potentially a ballast and play some defense if things do go south on the economic front.
Yeah. You look at credit spreads, things like CDX, investment grade, high yield, trading at really tight spread levels. Is there any juice to be extracted on a spread basis? Or is the game now in credit simply holding outright duration and going in for that all-in yield?
We would definitely lean more towards the latter that you just mentioned. Obviously, credit spreads are really tight. We think at this point, you're really just harvesting additional income versus treasuries, betting on things staying the same. We've been favoring moving portfolios up in credit quality, so out of high yield into investment grade, but also moving, again, closer on the maturity spectrum, so reducing your sensitivity to spread widening by selling, say, 7 or 10-year investment grade corporate bonds and moving into 3 to 5-year corporate bonds. And I do think there's logic to having just outright treasuries in the portfolio to really play defense, because to your point, we really just don't think there's that much left in terms of the return opportunity from further spread tightening. We think we're sort of at the end of the spread tightening cycle.
Yeah. And let me just round up by asking you what you think the biggest risk is right now to your longs, say in the 3 to 5 year part of the curve, and what keeps you up at night in terms of all of the things that could actually move against your fixed income position?
In terms of the things that keep me up at night of what could cause negative total returns in fixed income, I would say it would be a situation where we increase the fiscal impulse in the U.S. from the level that it is at today. So if President Trump is able to find a way to cut taxes, whether that's, lowering the corporate tax rate, lowering tax rates on manufacturing companies, extending the age for Social Security retirement, anything that will increase the deficit and increase growth and inflation in the short term, I think the Treasury market and the level of yields will definitively respond to that. I do think that the level of Treasury yields vis-a-vis the level of deficits that we have today is a bit of a governor around what they can actually accomplish in terms of, further stimulus for the U.S. economy, against a backdrop of already very stimulative levels.
Do bond investors actually believe that this DOGE efficiency team are going to be successful at reducing the size of the U.S. deficit?
I would say for the past 6 to 8 weeks, probably no, but I do think the pace at which they have moved and sort of, just the reaction that we've seen on the back of them freezing funding where they eventually turned it back on, similar to tariffs. But I think I would say that the level of seriousness they have with respect to cutting spending and cutting waste, I think bond investors have definitely started to focus on that. And I think, if you did eliminate, say, 10 to 15% of discretionary spending, I think that would have a dramatic impact on the U.S. economy. So I think it's something that bond investors aren't necessarily positioned for today, but I think they're exploring the possibility and maybe increasing the probability and the distribution that does matter for bond prices going forward.
Yeah, and even Treasury Secretary Scott Bessent has reiterated his 3x3x3 mantra. So they want to get to that 3% deficit. How you get there from 7% is a big question. Connor Fitzgerald, Wellington Management fixed income portfolio manager, thank you so much for joining us. Now, coming up, Israel's military pulls out of a belt of land in the Gaza Strip as a fresh round of truce negotiations is set to begin in Doha. We are live in Jerusalem next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Israel has pulled troops and tanks out of Gaza's Netzarim corridor as the initial truce period passes its halfway point. Hamas released 3 Israeli civilian men on Saturday, and Israel freed another 183 Palestinian prisoners. This comes as mid-level Israeli envoys prepare for a new round of mediated truce negotiations in Qatar. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams, who's joining us now. So, Dan, we're hearing from Prime Minister Benjamin Netanyahu. He has said that the Gaza hostilities only are going to end once Hamas is disarmed and toppled. Is this going to affect any sort of truce negotiations that are about to start again?
On the face of it, no. There's no great surprise here. It's worth noting that Israel has consistently said these are its war goals: ending Hamas rule in the Gaza Strip, returning all its hostages, ending any future threat from the Gaza Strip. And indeed, it had the support of the United States, both the former and certainly the current administrations in Washington. No great surprise there. However, what we're having now is a timeline issue because there is a current initial 6-week truce. We're halfway through it to move to the next stage of this arrangement in Gaza, a stage that all sides want to see ending the hostility. A big unanswered question has to be addressed, and that is what happens to Hamas? Israel, as has been stated, wants to see Hamas gone. Hamas has given no indication that it wants to be gone. Therefore, the question is there anything to negotiate about? Or effectively, is this deal going to stop with this first phase, a phase that we're only halfway through, but we expect another 17 hostages to go free should this phase be completed, along with scores of Palestinian prisoners. Nonetheless, that would still leave scores of hostages in the Gaza Strip whose fate would really be uncertain.
And Dan, what's been interesting also is that a lot of the rhetoric around the Palestinian state. We heard just a few days ago from President Trump giving his own recommendations for what he would do with the land. Now we're hearing Netanyahu suggesting potentially creating a Palestinian state on Saudi soil. Is this being received similar to how Trump's comments were received?
Well, I think, to be fair, Trump's comments were stated with utter seriousness. They may have been received with a great deal of surprise internationally and even by his Israeli guest, Netanyahu, but he's restated that, President Trump, several times. It seems for now he is serious. On the question of what Netanyahu said about a potential Palestinian state on Saudi soil, it would appear he was joking. That came in the course of an interview that was aired on Israeli television on Thursday evening. Halfway through the interviewer flubbed the question. He noted that the Saudis have always insisted on a Palestinian state as a prerequisite for Saudi peace with Israel. However, the questioner said Saudi state instead of Palestinian state in his question. Netanyahu's retort was, well, if you're confusing the two, the Saudis could definitely fit a Palestinian state in their territory. If this was a jest, and it appears to have been a jest, perhaps it was ill-timed. Perhaps it was ill-judged, because there was a reaction from Saudi Arabia that seemed very unhappy with this statement, and from other Arab powers. As far as they're concerned, if there is to be a Palestinian state, it should be on Palestinian land, specifically the Gaza Strip, the West Bank, etc.
Certainly. It's always great to get your reporting on the show. Bloomberg's Dan Williams in Jerusalem for us. Dan, thanks so much. Great to speak with you. Now, here's a few other stories we're following in the region. Lebanon has appointed BlackRock money manager Amir Besat as economy minister, making him a key figure in the new government. Besat will work with finance minister Yassin Jaber in preparing a recovery plan to unlock a stalled $3 billion IMF package and oversee financial restructuring. Lebanon's defaulted bonds have surged since Israel and Hezbollah agreed to a ceasefire in November. The boss of the Suez Canal Authority says he expects traffic through the waterway to gradually return to normal by late March and fully recover by mid-year, provided the Gaza ceasefire holds up. Yemen's Houthis said they'd stop targeting U.S. and U.K. ships in response to the pause in fighting. Currently, no more than 32 ships a day pass through the canal, compared with 75 before the war in Gaza began. France is set to announce 109 billion euros in investment in artificial intelligence projects by companies, funds, and other sources over the coming years. Speaking on the eve of a two-day AI summit, President Emmanuel Macron also referenced an investment by a fund from the UAE of between 30 and 50 billion euros in a data center campus. Now, coming up, President Trump confirms plans to slap tariffs on steel and aluminum from all countries. We'll dig into the impact on commodity markets in just a bit. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Shumana Bersachi in Dubai. Chancellor Olaf Scholz struggled to land the decisive blow he urgently needs in the first of two televised debates ahead of Germany's election in 2 weeks. In the 90-minute duel, Scholz and conservative opponent Friedrich Merz argued that they're best placed to restore the economy to meaningful growth while keeping the far-right AfD party at bay. Scholz currently faces a poll deficit of some 14 points. Former Credit Suisse chief executive Tidjane Thiam has given up his French citizenship as he prepares to run in Ivory Coast presidential elections. One of the conditions to qualify as a presidential candidate is exclusive Ivorian citizenship. The former banker still needs to win the Democratic Party's primaries to stand in the October election. And a look at equity futures leaning towards the green despite the latest Trump tariff salvos, this time on steel and aluminium. All of these futures are trading in positive territory. S&P futures up 0.3, NASDAQ up 0.6%. Coming up, Jason Stearns of Simon Fraser University joins us to discuss the conflict in eastern Congo. Stay with us. This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. President Trump confirms plans to impose 25% tariffs on all imports of steel and aluminum, broadening his trade salvos and threatening ties with some of America's top trading partners. Israel pulls troops and tanks out of a belt of land in the Gaza Strip after the fifth hostage and prisoner exchange on Saturday. Meanwhile, Arab nations reject Benjamin Netanyahu's proposal to resettle Palestinians from Gaza in Saudi Arabia. Plus, African leaders call for an immediate ceasefire in Eastern Democratic Republic of Congo as the conflict with Rwanda-backed rebels risks igniting a regional war. It's just gone at past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. Yet another Monday morning, walking in to some of these tariff headlines. Today, though, the Trump administration is talking about tariffs on steel and aluminium. So it's commodity specific as opposed to country specific this time around.
Absolutely, Jumana. And as you were saying earlier, seeing a different reaction than what we got last week when we were in a similar position, and hearing from Garfield Reynolds, potentially it's that the markets are just a bit confused about the timing and the extent of these. But let's just take a look at where markets are positioned, because it is a week where we will see Fed Chair Jerome Powell testifying in front of Congress. We'll also get some data points, U.S. CPI and PPI. We're continuing earnings results. But as Jumana was mentioning there, we are still seeing U.S. equity futures, at least for the most part, up right now, even as investors are dissecting these plans by Trump to impose these tariffs. What we saw from the S&P on Friday, it closed nearly 1% down amid concern around these tariffs. And we did see it actually snapping a 3-day winning streak to close a second week lower, but pointing higher right now, 0.3%. Treasury yields also pointing down after rising across the curve on Friday. On Friday, we did get that U.S. jobs report as well as consumer sentiment. And we're seeing right now the 10-year yield at about 4.49%. And as Jumana was saying there, yes, the focus is on commodities right now when we talk about tariffs, especially steel and aluminum tariffs. Right now, iron ore, it's a key ingredient in steel production, is up just about 0.3%. And we're also seeing some movement with some of the other commodities. Brent crude also pointing higher right now, just about 0.8%, trading at just about $75.26 a barrel after a string of weekly declines. Last week, actually, we saw oil notching its third weekly drop. And as I typically am in South Africa, I'm paying close attention to the rand, but it's also because we are seeing the U.S. president again continue to take aim at South Africa. We're seeing the rand under pressure following some announcements from Trump saying that this time he's announcing a freeze in all aid over what he has falsely claimed, he says, are rights violations and also allegations of genocide against Israel that South Africa has waged. And so clearly seeing this tit for tat going back and forth with South Africa and the U.S. and seeing the play out, really this all playing out in the currency markets.
Well, 8 African leaders have called for an immediate ceasefire in the eastern part of Democratic Republic of Congo. They made the call following a summit in Tanzania.
The time for action is now. The lives of millions depends on our ability to navigate this complex and challenging situation with wisdom, clarity of mind, empathy for the millions whose lives and livelihoods have been plunged into uncertainty.
At least 3,000 people have been killed and hundreds of thousands displaced since fighting broke out between Rwanda-backed M23 rebels and Congo's army. Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. Ondiro, just walk us through the highlights of the summit and whether it is likely to have any impact at all on the fighting that is still taking place.
Hi, Jumana. So we saw leaders from EAC and SADC all agree that diplomatic and also political routes are the best solutions to solving the problem of escalating tension in the Democratic Republic of Congo. Other agreements that were reached, including merging the Luanda and Nairobi peace talk processes and conditional ceasefire, and also cessation of hostilities in the coming weeks. The military chiefs are also tasked with providing technical direction on how humanitarian assistance is going to resume, and also asked to open a major major supply routes because Goma is running low on water, food, medical supplies, and there's also very limited access to electricity. But in terms of both parties nearing a solution, they're still far from that, because after the summit, President Paul Kagame took on X and said that nobody was going to tell Rwanda to shut up. If anything, DRC has mounted a problem that is becoming a security problem to Rwanda. We are also seeing the United Nations High Commissioner for Human Rights tell an emergency sitting in Geneva that the situation in DRC is escalating very fast, and if nothing is done, then this city is going to become inhabitable for millions of people that have sought refuge in that town, and that also this conflict risks spilling over the borders into neighboring countries.
Andira, thank you so much for the overview, an important story we've been monitoring very closely. Bloomberg's Andira Ganga in Kigali, Rwanda.
Now, joining us now to expand on this is Jason Stearns, founder of the Congo Research Group at NYU and professor at Simon Fraser University. Jason, great to get you on. We just had our reporter Andira there talking us through what we saw over the weekend with this meeting. The question now is, do you believe M23 and Rwanda will actually stop fighting at this point?
Yeah, thank you very much. So I think the meeting on the weekend was actually quite favorable to Rwanda. It did not, in contrast with other declarations that have been issued, actually call out Rwanda, nor did it ask for the M23 or Rwanda to withdraw from the town of Goma. Instead, it asked for the Congolese government to open negotiations, direct negotiations with the M23, something that it has so far refused to do. So I think altogether, the Congolese delegation walked away, I think, quite frustrated from the conference, and I think Rwanda came out on top. So it doesn't seem like this is going to add any additional pressure on Rwanda to act.
What about, Jason, the fact that we've heard President Kagame denying any sort of involvement or support from Rwanda to the M23 group? Does this potentially change his messaging there, especially as he's getting more and more pressure from the international community?
Yeah, I mean, it's the incontrovertible fact. There have been 6 independent UN reports suggesting that Rwanda is backing the M23, so it's very difficult to deny. At the same time, I don't think that Kagame will act or change his behavior unless there are material sanctions against him. And so up until now, the international community has condemned. The UN Security Council is going to come out with a statement very soon, probably also condemning. But these condemnations have been going on for over 2 years now. And I think unless there are material consequences, so either direct targeted sanctions against members of his government, or aid suspensions against his government, as there have been in the past when they backed rebel groups in eastern Congo, I don't think his behavior will change.
What does that mean for hostilities then in Congo, Jason? You said that potentially DRC walked away frustrated after the meeting. Does that mean we continue to see multiple rebel groups fighting and this to continue to deteriorate in the country?
Probably. The M23 has suggested that it wants to go all the way to Kinshasa, which is, of course, a very long way away. It's 1,500 kilometers from where they currently are. They're currently marching towards the town of Bukavu, which is a town of around 1 million people situated at the south end of Lake Kivu. Goma, the town that they already hold, is at the north end of Lake Kivu. And so if they go ahead and take Bukavu, I think that will provoke even a further political crisis. That will probably bring additional humanitarian suffering. There are already 700,000 people have been displaced this year alone by the M23 conflict, and there are 7 million people displaced in all of DRC. And so my guess is, unless there is a new impetus, a diplomatic impetus, because militarily I don't think there's anything that can stop the M23 rebels. That's because of their backing from Rwanda. My feeling is this conflict will continue.
Who would be able to come in diplomatically, Jason, and actually assert some sort of power to get some of these leaders to listen, though?
Well, I mean, Rwanda's is actually not a very difficult conflict to solve. Rwanda is very vulnerable to pressure from the aid community. It receives $1.3 billion a year in aid. It is extremely important for Rwanda to maintain what it calls brand Rwanda, the labeling of Visit Rwanda on major soccer teams. Arsenal, PSG, Bayern Munich all have Visit Rwanda on their jerseys. They're trying to organize a Formula One race in Rwanda. The National Basketball Association is partnering with Rwanda. They depend enormously economically, not only on aid, but I think more on their reputation. So it'd be quite easy, I think, to be able to bring pressure to bear on Rwanda. In the past, if you look, in the past, when Rwanda's backed armed groups in the Eastern DRC, for example, in 2012, it backed the first iteration of the M23, the international community suspended $240 million of aid. That had an almost immediate impact on the Rwandan government. They then turned around and pulled the plug on the M23. This time, there's been nothing of the sort. In fact, what you've seen is donors increase their aid, especially the European Union, signed a major $900 million deal with Rwanda in 2023. The European Union has also provided military aid for the Rwandan army in Mozambique, where it's conducting operations. And so Rwanda is in a different position now because it's been able to leverage the little that it has, especially its very professional and efficient army, to gain friends around the world, to gain political capital. And so it would be easy to solve. It would be easy to bring pressure on Rwanda, especially for Western donors, but it's something they've not been willing to do so far.
And Jason, finally, what happens next, especially when we factor in what you just said there? There's also a lot of concern about this turning into a regional war, this potentially being about some of the minerals that are in this part of the continent. How does this play out over the next few weeks, in your opinion?
Well, I think one thing to keep a very close eye on is the conflict between Burundi and Rwanda. Burundi and Rwanda are fighting a war on Congolese soil. The Burundian army has somewhere around 10,000 troops deployed in the DRC. The Rwandan army has somewhere around 7,000 troops in the DRC. They've clashed on numerous occasions. There's been bloody battles between the two neighboring countries. And these are countries that have deep running tensions between each other. So that's one thing to look out for, I think. In terms of minerals, it's absolutely true. It's not just Rwanda, but Burundi, Rwanda, and Uganda. The largest export of all three of those countries is Congolese minerals, especially gold. Rwanda exported $1.1 billion in minerals, most of which come from the DRC in 2023. And so I think that is another factor that people will have to reckon with.
Yeah, a lot to watch very closely. It's great to get your insights, though, this morning. NYU Congo Research Group founder and Simon Fraser University professor Jason Stearns joining us there to talk about the conflict in East Africa. Thanks so much. And also, this news we're following. President Trump has frozen all U.S. aid to South Africa, citing false claims of rights violations against the Afrikaans population and South Africa's genocide case against Israel at the ICJ. South Africa says it's seeking diplomatic solutions to any misunderstandings. A group that says it represents 2 million Afrikaans speakers has voiced opposition to Trump's decision to withdraw aid. Now, coming up, uncertainty around commodity markets as President Trump announces tariffs on steel and aluminum imports. We'll discuss the impact next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. LIV Golf is closing in on more places for its star golfers at the world's premier competitions. Securing exemptions could pave the way for unification between the breakaway Saudi-backed league and the U.S. and European tours. I spoke with the new CEO, Scott O'Neill, as he attended LIV's 2025 season opener in Riyadh.
We have been for, of, and about growing the game of golf. And there are so many new and exciting leaders. If you look at Derek Sprague at PGA of America and Mark Darbin at the R&A, and I'm new at LIV, and I know the PGA is looking for a new executive as well to work alongside Jay. And I think that provides an opportunity for us all to take a step back, appreciate where we are in this moment of time, and move forward. The fact that the leader of the free world, the President of the United States, thinks that golf is this important that he can engage makes us really happy and validates how important this game is. And I still believe it's one of life's great teachers and just as important as we could possibly find today in bringing this game together. So any news that brings us closer to that, I think is really welcome news for all the golf fans around the world.
Have you spoken to the president directly yourself?
I have not, no. In a few weeks, we'll be in Miami playing at Doral, which is a Trump course. And I imagine he'll make an appearance there. But in these first 30 days, I've had the time of my life, getting to know these incredible stars like Brooks Koepka and Dustin Johnson and Bryson DeChambeau. We have the best players from around the world. That's been an experience. Getting ready for this incredible event season, kicking off in Riyadh, and getting our feet under us and planning for the future.
Now, I know you're not in position to give us the contours of the deal, but is it your expectation that if a deal does come to fruition, that it would allow for more coexistence between LIV players and the PGA Tour? Is it your expectation that ultimately LIV players could participate in the PGA Tour without being penalized?
Our focus right now is on making sure we take the best players in the world to the best locations in the world. It's a deal and a construct that we've all been working on for some time, and we're all focused on the same goals and objectives, and that is to grow this game, put as many of the greatest players on the biggest stages of the world. And while I'd love to walk chapter and verse into the deal, I will tell you that anything that's good for this game is good for LIV, and we're thrilled that there's progress being made.
Yeah. One recent development earlier this week, the U.S. Open became the first major to actually create an exemption for LIV Golf players. Do you expect other majors to follow suit as well?
Very appreciative of Mike Wan and his leadership at the USGA. We heard today from Mark Darbin, who runs the RNA and the Open Championship, and they will be following suit. And at least the early conversations with Derek Sprague at the PGA of America are very positive as well. So it seems as if the headwinds are becoming tailwinds. There seems to be this incredible arc of momentum, and whether that's our deal with Fox in the US or our deal with ITV in the UK, or all the incredible partners we've had. Madden is our title partner here, and Bahri just came on board as well, and Roshan. So we're starting to get momentum in terms of the entire business. So it's quite expected in terms of where we're heading.
Yeah, you mentioned some of those broadcasting arrangements, and obviously the PIF have put in billions into LIV. Revenues, a big question mark from here onwards. To what extent do you think those types of broadcasting deals, those arrangements, are all going to be additive to your future revenue flow?
I'm here for one reason, and that's because spending time with His Excellency Yasser Al-Rumayyan is a man of vision and passion for the game of golf. He's got an incredible love and understanding of what's to come. And the investment to put this many incredible star players together will result in an incredible business. And so the foundational years have been built, and now we're ready to grow this business. So it's a really special moment in time right now.
That was the LIV Golf CEO Scott O'Neill speaking to me directly from Riyadh. Now, Philadelphia Eagles fans are celebrating after their team won America's Super Bowl, beating the Kansas City Chiefs 40-22. The Chiefs were playing in their 5th Super Bowl in 6 years, but in the end, they were denied an unprecedented 3rd straight win. President Trump was at the final, becoming the first sitting president to attend a Super Bowl in the event's 59-year history. Taylor Swift was also there, and you can read online about what happened with her. All right, coming up, we discuss the impact of steel and aluminum tariffs on the commodities market. Next, this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Let's return to commodity markets. After President Trump said he's going to impose 25% tariffs on steel and aluminum, he says the tariffs will apply to metal imports from all countries, but did not specify when the levies would come into effect. For more on the impact, let's bring in Bloomberg's Martin Ritchie joining us from Shanghai. So, Martin, which countries? We don't know a lot of the details about what Trump has put forward there, but what do you make of this most recent announcement?
That's right. Quite characteristic off-the-cuff remarks from Trump on tariffs. He says that there's going to be a blanket 25% tariff on imports of aluminum and steel to, of course, very important industrial products for US manufacturing. But we don't know any of the details. We don't know about the timing of any tariffs that are incoming. We don't know whether they will add to other existing tariffs already in place. And of course, we can be sure that there will be room for or opportunity for negotiation around these tariffs in the coming weeks, perhaps.
That's right, Martin. Is this more of a negotiating tool, or is there some sort of activity that we should be looking for now that this announcement is out, potentially with companies or with countries? I mean, what is it that you are watching for next?
Yeah, so if we just take this at face value, a 25% blanket tariff on steel and aluminium, the biggest brunt would possibly be borne by Canada because it's the top supplier of both those metals. In aluminium, it's actually accounting for 56% of US aluminium imports. So that's the aim is obviously to help US aluminium producers. And this is obviously also going to impact US aluminium buyers, perhaps negatively. This has echoes of the first Trump administration. In that time, he also put 25% tariffs on imports of steel and 10% in aluminium. But there were a whole bunch of exemptions to that. For example, the European Union and ultimately Mexico and Canada. And you can possibly see this as feeding into Trump's broader negotiations certainly with Canada to the north and Mexico to the south. They are already facing universal tariffs from Trump that have been postponed.
Yeah, potentially we learn more, though, when the U.S. wakes up. But thanks so much for that update. Bloomberg's Martin Ritchie in Shanghai. Appreciate it.
Well, as we were just talking about, Jen, there hasn't been a noticeable reaction on equity markets today. Everything is leaning towards the green. S&P futures up 0.3, NASDAQ up 0.6%, and Euro stocks also leaning towards positive as we head into the European session. Another big focus for investors this week is going to be Powell's testimony over the next couple of days. So that should give more direction to this market. But for now, we are seeing at a macro level, investors are brushing off the latest tariff salvos coming out of the Trump administration on steel and aluminium. So that is the picture for equities, leaning towards the green after the pullback that we had on Friday, which saw Wall Street end in the red. But that was it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai with Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.